I've always grown up, my grandfather always used to tell me cash is king. But I don't think that's always the case. When was the last time you paid for something in cash?
No, I can't recollect. The last time I paid someone for cash was for the guy who comes in to cook. He wanted to buy something, so I was like, okay, yeah, here's 20 dirhams. He's like, no, but then that thing comes to 25. I said, listen, you pay 5 and I'll add it up in your salary.
Well, liquid assets can help you navigate uncertainty and maybe capitalise on market dislocations for your future survival with secure financial well-being. And to get more about the idea of, will cash always be king for investors, we're enjoyed by a friend of the show, Sandeep Jadwani. Sandeep, good to speak to you again.
Hi. Welcome back, guys, after your cricket.
Thank you.
Yeah, thank you. Only a short break, and then we're back into the Cricket World Cup. So, well, more on that soon. But we're discussing the topic of cash is king. I've always grown up with this term, cash is king. But is that still the case when it comes to investors?
Cash is always the king because even as professional financial advisors and even as investors, we always are of the notion that though you are a big investor, but the biggest trait of an investor is never to put or never to invest all his money. Okay, so there's always this component of cash that is lying around, whether in fixed deposits or in current accounts, not usually current account, but liquid accounts or high yield deposit accounts that can be utilized to cash in on opportunities that may come eventually.
Go ahead, please.
Yeah, so just to capitalize on opportunities or emergency needs, cash is always the king. That'll always help you out now.
So when you say that, cash kept in fixed deposits or liquid asset, where you can withdraw it as and when the time is in indeed. It does not essentially mean that you keep your cash in hand or in your lockers or in your banks as such.
No, it does not mean leaving your cash idle. It means leaving the cash in avenues that can be easily liquidated in a day or two.
Okay, so this could probably mean that you could keep it in savings accounts, which now give you whatever 2-3% interest per annum. It could also mean fixed deposits, or no, fixed deposits don't come in this.
No, fixed deposits also come in this. The only thing is that if you don't utilize that money or that cash, you end up getting the entire income from your fixed deposit. Mm-hmm. Fixed deposits also come in various tenors, right? 3 months, 6 months, 9 months, 1 year, 2 year, depending, or monthly as well. UAE offers monthly rollover fixed deposits too.
Yeah, I've been speaking to a couple of bankers to understand this. On the monthly rollover, fixed deposits. They sound really exciting because you're not keeping your money packed in for a year or more. You're keeping it for smaller time durations, just in case if a time as such where the requirement of money comes in too.
Absolutely. So what also happens is when we say cash is king, in case you keep a long-term deposit, and you are in your, let's say you've kept a deposit for 12 months and you are in your 10th month, breaking the deposit then would mean that you've lost out on the entire interest for 10 months.
Right.
So during such time, banks offer immediate cash availability against your fixed deposits at a much cheaper rate than a loan also. Mm-hmm. So when we do the math, you would end up into a situation which says, hey, it's better to pay a few percentage interest for 2 months until the fixed deposit matures rather than breaking it up.
For many people that have been holding on to part of their equity in cash, are you seeing now an example of that, given that the interest rate, the cash rate, not just here, but in most countries, is the highest it's been for a number of years?
It is the highest in the 21st century, by the way.
Wow. Okay, so
a fixed deposit giving a 5.5% per year was unheard of, and usually equity returns is what we used to look at 7%, which came with its own risk.
And what effect does that have into other investments, whether it be the share market, given that now there's security of 5.5% of just putting the money in the bank?
So at these moment in time, though equity returns over a long term, of course, are much better, averaged out at about 10% if we look at S&P 500. However, with interest rates at 5.5%, inflation is also coming down. So today, a fixed deposit is actually just about beating inflation. So you will not
Interesting.
lose the value of money, but you'll just gain slightly 0.25% over the inflation bit.
Well, that goes against. I mean, the argument of cash is king was always cash in your hand, but saving cash in your hand. Because I tell the story. My grandfather last century, he always said, take a bet out, save it, and whatever, keep it. But cash just sitting in under the mattress or in the cupboard, that's devaluing every single year.
That is indeed, because earlier, let's say about a decade or two back, it was very difficult to encash your money from your bank accounts. You actually had to queue up, wait up, inform the banks about, hey, I'm coming to withdraw money, and various other aspects. But today, with technological advancements, I think the access to money is almost immediate. So that has changed.
Well, Sandeep, we've got some messages that have come through. Tabloid has sent a message, 0586861003. I'm really enjoying Sandeep's info. Are you able to say which banks in Dubai are giving good interest rates on FDs, and which banks do that, and how do they go about it?
I think most of the banks, they would differ by about 25 basis points plus minus. But most of the banks in UAE also have tier-based deposit rates. The higher your deposit and higher the tenor, the higher the rate of interest. Lower tenure and lower amounts will fetch you just the rack rate.
But then the rack rate also is very attractive, as compared to what used to be the situation within the UAE banks. You think this is something that will stay for some time, or this is only for maybe a year and a half before things go back to being, coming down to the earlier rates, which were prevalent probably say 2-3 years back?
Interesting you got this topic out, because as we speak, even in the US, the Federal Open Market Committee is having their meeting today about the future of interest rates. So today they're going to hold the interest rates, but the narrative coming out is that interest rates will remain higher for longer. So we could see these risk-free rates or these deposit rates prevailing for the next 1 year, 1.5 years before they can start going down.
Yeah, the news coming out of the States, is that the Fed Reserve looked to hold the rates at the 22-year high. But we've also been noticing that oil, the price of oil has fallen for the first time after being on an incredibly bullish run over the past few weeks. Sandeep Jadwani, we always appreciate your experience as the financial expert. And I think a lot of people are very, very excited about the availability of that cash interest rate at the moment. So we thank you for your advice.
Thank you so much, guys. You guys are doing an amazing job.
Wonderful.
See you soon.
We
Bye-bye.
appreciate it. There's Sandeep Jadwani, financial expert. What do you think about that? Are you more inclined now to keep your money in cash or utilise that fixed rate? And as you were saying, I mean, that is very attractive, a monthly fixed rate, knowing that you can get the money out. And I think it seems like an advertising, really, because it's the security of, I can take up my money, but most of us won't. They'll keep it in there to keep learning interest on interest.
It just makes sense, right? I mean, and it's not that you have to block it for a year or 2 years or whatever. Back in the days, things were like that you had to put in for 5 years and forget it. But now, with every month, an opportunity comes in where if you have planned in that, listen, I'll put X amount in my fixed deposits, and it keeps rolling on. You need to withdraw. You just withdraw it at the end of it.